Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, March the 11th, 2025. It's about 7:30 in the morning. Okay, so let's obviously we had a pretty substantial sell-off yesterday in the US equities. So let's just have a quick look here. And I just want to look at the volatility here because the volatility yesterday did actually get almost up to about the 30 level. And normally, of course, that is either sort of a cause or a symptom of the strong sell-off. So now suddenly we've got a little bit of a pushback this morning, a little bit of a bounce back here on the S&P. But before we look at that, I just want to have a look at a couple of things here about volatility. So first of all, just look historically. Kind of interesting, just looking at some numbers yesterday that the last time that when the VIX topped 30, so above 30, that pretty high level, stocks rebounded in the days following. So the point I'm trying to make here is that above 30, it's relatively unusual. It's quite a rare occurrence. And normally, not always, but often that signals a kind of a capitulation. It's actually the bottom in the stocks, and you might expect some kind of short-term rebound. And kind of just interesting here to look at, some sort of instances where the VIX did get above 30. So you see here on this column here, these are all sort of instances where VIX got into, the 31, 32, 37. And then you can see here, a lot of these are actually from the last, let's say, 2 or 3 years. And what we can see is that the cash index, XPX, 5 days later, normally, with the exception of 2022 here in June, but normally they go up. And if you actually look 1 month later, normally they've been up a little bit. So again, it's a pretty small sample size, only about 6 or 7 there. But just interesting to note that often when the VIX does go to that crazy level, well, not crazy level, but that elevated level, often that can signal a short-term low. And then just looking at a couple of these things here, let's just have a look. This is always sort of interesting to look at. Actually, let's look at the VIX curve. And we can see that it's still in backwardation. So the spot, as we say, trading here about 7:30 in the morning, is still pretty elevated, about 27.5, and definitely in front of the futures curve here. But if we look compared to yesterday, which is this orange one, we can see that it's a little lower than yesterday. So the shape of the curve is the same. And if we look from a week ago, it's definitely more elevated. So basically what that's saying is that it's still at elevated levels, but maybe a little bit calmer than yesterday. Still quite elevated though. The other thing as well, which is interesting in terms of the VIX, is just the futures curve. And normally it's inverted, of course, but when it is in a backwardated state, that does signal sort of elevated stress. And we can see here, what is interesting, I like to look at the 1 to 6 months. So this is the 1 and the 6 months. And what we can see here on this 30-minute chart is actually that the front values went up to a high yesterday of about +4, which is actually pretty elevated. But as we can see on this 30-minute chart, things have calmed down since, or basically in the overnight session. So it looks as though the volatility is still pretty elevated, but it's coming down a little bit. And another way to look at that is actually just to look and see what's priced in the futures market here on the options. So what we can see here, we've got the ES sort of futures for March, and we can see that in the implied vol percentiles, we're still at the 100. So we're still at an extremely elevated level, although the actual ranking has gone down a little bit. But then if we actually look and see what's literally priced in for, let's say, for the straddle for the 0 DTE. So this is live data here. And we can see that with a strike of 56.45, you're paying on both sides about 32 points. So you're paying on both. So for the total of the straddle, you're looking at 64 points for the straddle, which is about what's that, about 250 ticks or so. So still pretty elevated. And you can see here at the money, you're paying a 46 sort of implied vol, and overall average 32. So still pretty elevated here on the ES futures. Let's see how it turns out. So I'm just going to grab some tea here. So we got the sell-off yesterday, and a lot of people are pointing to the fact that over the weekend, there was the interview by Donald Trump in which he declined to rule out a recession and said essentially that there could be some short-term pain. We also saw there was a comment from Secretary Treasury Bessent talking about a detox for the US economy. So everything which seems to be triangulating is really this idea that coming from both Bessent and Navarro and Trump himself, of course, is this idea that they are structurally trying to redo the American economy. And I thought actually it was kind of interesting that Trump in his interview on Sunday, he did say that the Chinese have a time frame of 100 years. So he said, hey, we tend to think in North America of quarter by quarter results, but he's basically saying that it really seems quite serious, despite the chaos, to sort of rejig international trade and to try and bring some manufacturing back into the US. And he essentially was saying that he's not looking at the stock market. He's thinking a bit longer term. It could take essentially a few quarters, a period of time for that to happen. And again, backed up by Scott Bessent's comments that there needed to be some kind of detox for the American stock market or the American sort of economy. And indeed, the market was only too happy to oblige with the detox. And you know what markets do? If markets think that you're going to test something, they will actually test them. So, of course, we've had a pretty substantial sell-off. But if we now actually look at this here, we're starting to sort of stall out a little bit. And this is on the ES futures, although we can go, which you see has bounced back a little bit. But also, if we look at the SPX on the cash, you can see that we've got here almost back to a sort of a 61.8% fib retracement. This is back on ES on the dailies here. So a little reactive bounce is absolutely to be expected here, and it's typical. But we can't say this is bullish at all at this point. So again, one way which I like to do is just to put a quick fib on it for the retrace. And you can see here that if we take from this impulse, the down impulse from, let's say, the 19th of February, you can see that the 38% fib retrace here would be at 50, let's call it 5,800. So we're still quite a long way from there. So this little bounce today is, I'm not going to say it's pathetic, but it's insignificant in terms of technical signification. So I would say that the bulls, the first thing they need to do is to kind of scrape up to this level, which also has a bit of horizontal kind of congestion here. So I think let's see what happens if we can get up to 5,800. But the market is still still pretty weak. Similar kind of situation if we have a look over. Let's look at the Nasdaq futures here. So again, what we can see is that we had a pretty significant sort of sell-off. Obviously, we're down below the 200-day moving averages. If we look at some of these moving averages here, let's just put on the EMAs. And you can see that we broke well down below the 200 moving average. Just by the way, it's the same thing on the SPX down below the 200-day moving average. So pretty weak. And again, similar kind of situation here is that if we, I'm just going to draw the fib here. So again, similar situation to the SPY. If we look at NASDAQ here, that we're not at all, I would say getting up to this 200-day EMA is probably the first test at around about 20,300, which is almost, at this 38% retrace. So that's the first target there for the for the bulls. And you could also argue maybe this level here at about 20,000 is quite a key psychological and at a horizontal level. So at this point, this is a purely reactive bounce. I think it's early to say that this is some kind of recovery or V-shaped recovery. And again, as I was saying earlier, with the VIX, though, the VIX does indicate that one can get sort of short-term recoveries. But it wouldn't surprise me in the equities, let's say going back to ES, if we get up to, something like 5,880, 5,900, something like that, and then there's maybe a bit more selling to happen. I've been looking at some CTA numbers, and it seems that a lot of the trend following systematic kind of sort of funds, they have sold a lot. But again, looking at some stuff this morning, there seems like there is still, some quantity to sell, and it depends on the time frame. So the longer term CTAs, they may actually still be long and still need to offload some of their longs. So you see if they have a longer term time frame. On the other hand, it seems that the shorter term CTAs have actually unloaded most of their longs and are now actually the flipped short. So interesting in terms of that sort of systematic kind of stuff. Over in Europe, interesting things. We had a bit of a risk off yesterday, and that was essentially because the Green Party, the junior sort of a partner in the coalition, essentially said, whoa, not so fast with all of this defense and infrastructure spending. And so we saw yesterday, if we look at some of the European indices, let's just look at the Euro stocks here. We had a big red day yesterday. And you see here on the futures, That was down yesterday. And you see on the DAX, which is the Germany index, we had a big red day yesterday. And that was just on this notion of the Green Party saying, not so fast, we might have to make some adjustments. And so there was the risk that by the deadline, which is March the 24th, I believe, that big infrastructure defense spending package would not actually get in. But what we saw overnight is that there was someone from the Green Party in Germany essentially saying, okay, it looks as though we should be able to do a deal. And it seems as though the Christian Democrats and the Social Democrats have essentially promised the Greens a lot of sort of climate change spending and a lot of sort of green kind of projects. And what we can see here is a bit of a rebound. So we see that on the DAX, the German futures, they're up, looks like up 50 basis points. We can also see on the Euro stocks more generally up a little bit. So a little bit of risk on back in the markets. Again, we're seeing the US stocks bounce. We're seeing the European stocks bounce a little bit. And of course, we're seeing the Euro bounce. And if we look at the Euro here, we can just have a look at that and see that that is just very, very strong against the US dollar here. Now, it's coming up to an extremely interesting point, which is, let's call it about the 109.4 kind of level, which is only probably 30, 40 pips away. So we're getting very, very close there. Gee, I mean, it sort of feels tempting to at this point to kind of start thinking about shorting this, but the reality is that there seems to be quite a lot of money flow going into European stocks, some kind of repatriation sort of process going on there. Again, it's difficult to be buying at this levels, probably waiting for a pullback. It could be interesting. It could be interesting for those of you feeling brave, and this might include myself. If we get a level at, let's say, 109.40, 109.50, we get some kind of spike. Maybe a short-term tactical sort of reversal, kind of a short, but again, with a very tight stop loss. Because the other issue to keep in mind here, just looking at some of the currencies, just while we're here, in terms of a little bit of risk on, but you see something like the Aussie still finding it hard to rally. It needs better news out of China. If we look at something like the JPY, we could see the US up a little bit on the JPY, just at this 61% retrace here. So the US dollar, not completely down and out, and it really does look like a European story. You see here the euro against the JPY looks as though it wants to break higher, maybe up to a new sort of test these highs, maybe even up to 164 or something like that. So euro against the Aussie, I mean, look at this, just absolutely sort of parabolic here. So incredible outperformance against the New Zealand, very, very strong. Against CAD, very, very, very strong. So this is really not so much massive weakness in the US dollar, although I've seen that. It's really a positive European story. And, the thing is to always be careful is that when we look at the dollar index, the Dixie, it is 58% euro. So, it's not necessarily, a very accurate global measure of where the US dollar is. If you actually look at the Bloomberg index, BBDX, that's a little less weak in the US dollar, although still showing some weakness. What is, of course, important is that now that the Greens overnight seem to say, hey, looks as though we could figure out some kind of deal. That does look as though the infrastructure package in some shape or form will go ahead, or the spending package with defense as well. And of course, what we're seeing here, if you look at the yields in Germany, so looking at the 10-year yield here, a green candle, it came off yesterday, a bit of sort of risk off. But now that it looks as though this package of spending is going through, we see the yields pushing up. On the 30-year, we see them pushing up pretty aggressively, even at the front end here on the twos, up a little bit. But again, we're getting that bear steepening. So if we look at, let's say, the 230s, that's more steepening, more bear steepening. If we look at the 530s in Germany, another green steepening kind of candle. So the point is here, that looks, as that curve continues to steepen and those nominal yields go up, but inflation doesn't go up that much. Again, we're getting sort of higher real yields in Germany, which of course has got to be positive for the euro. And it's interesting here if we just start looking at some differentials. At what point does this spill over to the US? And it is spilling over a little bit. We've got the 10-year yields here in the US up a little bit. We've got the 5-year yields up. We've even got the front yields up, and of course the 30 yields up as well. So that spillover to global yields is a real thing. Also, the Japanese 10 years paying 1.6% at this point. So global sort of yields are going up, and that's going to pressure certain stock markets, and especially so global money now is going to flow to stock markets, which seem to be sort of fiscally loose and spending, which of course is the case in Europe, but is not the case in the US, where, as I alluded to, it looks as though this current administration, the Trump administration, really is serious about trying to sort of spend down some money. Other interesting thing here, I just want to look at some of the differentials, if I can see them, between the, let's say, like the German and the US, and we can see again that they, not as dramatically, but they are continuing to kind of sort of constrict a little bit. And as long as these keep on coming going lower, that in theory should be positive for the euro. So difficult to be shorting the euro at this point. Any significant dips seem to be bought. Dips in Eurozone bonds seem to be being bought. Less so in the US. So I think really what I said yesterday still holds. It's a case of buying the dip in euro assets and maybe selling rallies in American assets. Interesting just to look at let's see if there's any risk going on. So we see copper here, again, with this risk on tone, which we've seen overnight. Copper up today. We can see that silver also having a bit of a green overnight session here. And gold up, but maybe not as much. And it's interesting, as I was pointing out yesterday, just to look at gold in terms of euros. So if we look, sorry, if we look at a spot gold here, so up in terms of dollars, and if we actually look in terms of euro, which could be interesting, with those higher real rates, let's see, gold euro. Yeah, you see not nearly as much. So interesting here that gold priced in US dollars is definitely sort of more attractive than gold priced in euros, because as I was saying yesterday, those as those sort of yield curves are steepening and the real rates are going up, that makes gold priced in euros a less attractive kind of deal, basically. Interesting here to be also looking at Bitcoin. Let's see if it did bounce not quite off the 61.8% fib retracement. I was looking maybe here to get in a little bit lower with the risk on tone. So overall today, it looks as though the risk on tone is sort of a happening thing. Now let's see what happens with oil, because oil has been down in the dumps. And let's just have a quick look here. So if we look at oil here, bouncing a little bit, but it does look as though oil is, pretty happy in this trading range, bouncing off, the lows here, maybe trying to push some stops about $65 or so. And it's interesting just to see if that can push up, because if the economy in Europe is pushing up, that could be a positive. But again, you've got the president of the United States essentially talking about sort of pain, and then the Treasury Secretary talking about sort of a detox and whatnot. So oil will probably need to see a bit more growth and positivity in the US space. But if we look here just at the curve, which we haven't looked at for a few sessions, still in backwardation. Although if we look, from 1 week ago, you can see that the prices, the outright prices are definitely lower, and you can see that the curve is in backwardation, but it looks as though the curve, is slightly flatter than it was a week ago. And if we compare that, let's say, to a month ago, I'll just zoom in here a little bit, which is the yellow one, you can see that the prices are substantially lower, and the curve, I mean, it wasn't very sharp or sort of steep 1 month ago, but basically oil still has quite a lot of work to do. It's not a disaster. I mean, these time spreads are not sort of in contango or negative. So oil, I think, is probably solid. There's a bunch of meetings, the annual CERA meetings in Houston starting this week. So you get all of the big players in the global industry or energy industry in Houston, Texas this week. So there's often a lot of interesting kind of policy papers and speeches and headlines. A lot of people from OPEC are there, oil ministers, energy ministers. Obviously, a lot of US players as well and European players. So just keep your eye. Well, I'll be keeping my eyes out for any sort of headlines or just general sentiment about the future of energy and oil and nat gas coming out of Houston this week. In terms of what's going on today, pretty interesting, guys, just because we've got a couple of things. We had Delta Airlines yesterday afternoon, pretty negative, basically saying that there's a negative sentiment. There's a consumer slowdown. Consumers are nervous about spending. So pretty negative sentiment coming out of the airlines. We also see American Air sees what's its first quarter adjusted loss 60 saw loss of 20. Yeah, so it doesn't look great. Just having a quick look here at American Airlines. So the point is the airlines are starting, they're reporting, as I say, last night and today, and they are starting to give off some negative vibes, essentially saying that sentiment is cooling. There's a lot of nervousness about the Trump administration's policies. And so therefore, it's interesting in that context about sentiment, this talk of potential recession, a need to reset, taking some pain, a detox for the American economy. We look at the small business optimism survey from this morning, which is still okay, but as you guys can see here, less than consensus and less than the prior, so getting a bit weaker. Therefore, I think what's going to be quite interesting is at 10 o'clock we have the JOLTS numbers, and I think the market will be looking at those quite carefully just to try and get a sense of where the employment situation is. Also at the quits number, the quits number is this number which is essentially signaling workers' a degree of optimism. If you're optimistic about finding another job quickly for a better pay package, people tend to quit. But if we actually look at the quits rate, let's see if I can actually look at that here. You can see it's not the best. I should make that a bit bigger. Hopefully you can see that. You can see that that's actually been coming down. So kind of interesting to look at the quits rate, that it's basically been on a downtrend for quite a long time now. And that's just indicating that, sort of slowly, American workers, the American workforce is less confident about quitting or leaving their job voluntarily. So I think the market will look at this today. And for sure, let's see how that goes. But I just wanted to point out as well that certain markets are a little overextended. We see on the downside that the equities are a little bit overextended. We can look at the, let's say, for example, the SOFRs, which is the short-term interest rates. You see that they've come a long way. They've come in terms of repricing. The Fed has now got 3 cuts priced for 2025. This is Z25. You can see that they've come 65 basis points, essentially in, what's that, about a month. So a pretty aggressive, dovish move up in price in the SOFRs. You're already seeing those come back just a little bit today. And it wouldn't surprise me if we see the bonds. Let's look at, let's say, the 2-year bond, the ZT futures. Same kind of thing as the SOFR contracts. They've come quite a long way. You see there's a little bit of resistance here, and maybe it's just time for them just to come back in just a little bit, because we see that from the Fed, and this is the last thing I'll look at here. If you look at the Fed, the market has repriced fairly, where are we? Fairly dovishly over the last month or so, and I think I've got that here. Yeah, so if you can see here going out, let's say by the end of this year, for the December meeting, you see but 3.2 cuts, which is almost 80 basis points has been priced in. But I think the market's just coming back a little bit now. You can see here on the tick chart for the December pricing here, as you can see, we got down to almost 90 basis points. So what's that? That's about 3.5 cuts priced in, and just over the last sort of overnight session here. Again, very short-term chart on the tick here, just taking off, a few basis points here, basically saying, whoa. So again, I think the JOLTS number, and of course we have CPI tomorrow, but the JOLTS number today will be sort of interesting for the markets just to get a sense of, is the US labor employment market sort of solid, or is this sort of fear of a detox and potential recession and a slowdown? Is it actually being validated by some of the data? And to be honest, if we get a JOLTS number today, which shows a healthy market, I do believe this can go December pricing back up to 75 basis points, which would be another 5 basis points or 10 ticks on the SOFRs. On the other hand, if the JOLTS number comes in weak and the quit rate goes down, I mean, this could maybe sort of start creeping down here a little bit. Let's keep an eye on it. The other thing to keep an eye out on, of course, is the headlines coming out of Germany, whether it looks as though there will be a deal between the centrist parties and the Greens and the leftists, just to sort of push through this spending package. Ordinarily, that should be good for the stocks in Germany and Europe. That also should be good for the euro, especially on the cross pairs, and a negative, of course, for the bunds, which are under a bit of pressure again this morning. Thank you, everyone. Have a great day, and see you tomorrow.